I'm looking for leaders in lost decades or sideways markets. I'm Ju. When Joel told you guys that there's something awesome happening, I was actually scared that I'm not able to present because of this child inside. Nonetheless, let's take a look at leaders. So why is it that the Philippines, with 30 companies here, is something to look at? This is a chartered market technicians meeting, so a lot of technical charts, definitely. This is the data that I took a look for about 37 years, since 1986. If you look at the sharpest one-day drops, it actually happened just 2020. It didn't happen in 08. In fact, the top 5 sharpest drops actually happened in your time, in my time. It didn't happen 20 years ago. It just happened 3 years ago. March 19, 2020, that was negative 13% in a day. March 12, it was negative 9.71% in a day. And March 9, 2020 was negative 6.76% in a day. Those 3 days ended up being the shortest bear market in history, in the Philippines and in the world. So that was actually a historical moment. There's a lot of historical moments that happened during COVID, and it was the swiftest, sharpest bear markets that gave a lot of money, and depending on where you were on that day. Peter Lynch said this about bear markets, they're gonna happen. If you're in the market, you gotta know there's gonna be declines. If you're not ready for that, you should not be in the stock market. And the stomach is the key argument here. It isn't the brain. You have the stomach for these kind of declines. It should be noted that over 70 is just about 65 actually. In 37 years, how many times will you find 3 sharp drops? Actually, it's such an outlier. The largest drops, which is 2, and 1 of here actually happened in your lifetime, in our lifetime, just 3 years ago. A predominant mean is just 4%. So if you're looking for an apocalypse crash, you're looking for an asteroid again. It's not going to happen that easily. A COVID-19 does not happen easily. These types of drops happen though for, I don't know, some of you, not all of you, some are probably in school. I see a lot of young faces here, but a lot of people still believe and remember 15 years ago, the 2008 bear market. Well, this is the Philippine bear market then. From about 4,000, it fell all the way to about 1,750. Close to half, down 60%, with 6 large declines, 5 powerful bear market rallies in between. Talking about history, we can see a lot of declines, we've got a lot of rallies. So it's not a straight line down. That means that some people would opt to leave the markets every now and then. Shorting isn't available, but there will be people who will trade rallies. Not easy, but the rallies are fierce. Some of the fiercest rallies actually occur at latter part. 2.9 here, down 20%. Rally from 2.2 to 2.8. V-shapes, large drops. Strongest rallies happen during the next big drop. It's not that strong here. It's super violent here. So you can see like sharp V-shaped rallies happen a lot in bear markets. But those bear markets are often also the times where people look at these levels. Stan Weinstein calls these stage 2s, consolidations, the times when the markets overall are just leaping. Nobody sells a dull market. Nobody sells a sideways market. You can sell a V-shape, but don't sell these types of markets. These types of markets consolidate 6 months, a year, 2 years at times. When they break out, that first breakout is actually already double, triple, or quadruple your money. in just 6 months. So you missed the 300% moves. Or what you realize is that first 300% move is just the first 300% move. That's the start of a revolution. Within 36 years, it's hard to even think about a bull market because nowadays we are here. Let's talk about the history of the Philippines. Within 36 to 37 years, I was born here. So nobody would recall this, and I don't know either. But there was a 100 to 1,000 move in DSCI in just 2 years. In 2 years, the Philippine stock index went 10x in 2 years. I don't know if it had anything to do with EDSA revolution, but that happened. Sorry, wait, let's go back. You can't find it here, but 100 went to 1,000. And then, I don't know what happened. I was just a 1-year-old kid here. 1987 to 88, 89, 90. There was, I just read in the headlines, there was supposed to be a Black Monday crash. And then, those crashes were pretty fierce. How did this chart look? 1987 to 1993, prior to the Asian crisis. Here, what you'll see is, okay, the green ones, I highlighted them as a bull market. The yellow ones are sideways markets, lost decades. The red ones are bear markets. The definition of a sideways market is essentially you're going down about 20%, sometimes 25%, but it's just going nowhere. It's just going nowhere. It's just range bound. Let's go to it a few stuff, not in charts, but in like data mode. January 85 to July 1987, this was a 100 to 1,000 move. So it was a 10x move within 3 years. And then after that, you actually had a big drop, 35% down. I'm just going to use normal technical definition. If you're down more than 20%, I'll consider you a bear market. So that was down 35%. What happened after? Within 88 to 89, 1 year, from 730, you went 130. It's a V-shaped rally that even went a new high. An 84% rally. Why was it not called a bull market? It was an 84% increase. The next year, though, a 54% decline. Either you call this a sideways market or bull market, bear market, rally, bear market. Those were 3 years that happened. Right now, Nasdaq's what? Up 78%, 78.6. I mean, just the FIBO, sorry. All I'm saying is that within a bear market, you can hit all-time highs. It happened in the Philippines. Let's talk about 1990 to 1994. Whatever happened then, 363%. And you got deep corrections. I call anything less than 20% drop just a correction. Just for technical definition, not to call it a bear market. So you had a deep correction, a rally, bear market, huge rallies, sometimes a bear. So it's been really, really difficult. You could argue within 1994 to 2003, it was not easy. I'll even show you the charts here. These types of moves, huge moves, big drops, rallies, then a big drop, rallies. It's a lost decade. Similar to like 2030 to 2023. That's how you feel. In fact, if you check these data, bull markets for people who don't want to time the market, it's a data they'll often repeat. They'll say, well, bull markets are longer than bear markets. Can we find data for that? And the answer is yes. The average duration of bull market is 4.58 years. The average advance is 453% in the index. X that 1986 revolution here, which was an outlier of a 10x move, you still got an average advance of about 300% within around 4.58 years. Contextualize that the duration of bear market is sharper, faster, declines would be averaging 52%, and your bear market will end within 2 years' time. Typically, those are like data. So these happened in the recent memory of most people. The deep corrections of bull market only to break down then. Around 2014, 2015, and this is an argument that I will make. A lot of the people in the Philippines would say that the market topped PSEI at 9,000. The answer isn't 2018. It's actually 2013. And this is what's interesting with Philippine Stock Exchange and how Fibonacci can extend and predict a market top even if you charted 7 years ago. One trivia for you, I charted this 2016, 7 years ago, and I showed that if we're gonna cross 8.1, it's gonna be 8.9, and then 9.7, and then 10.9. Fast forward 5 years later, the final top pattern was actually 9,000. That 9,000 was 8.9. That was exactly this, 8.1, 8.9. That was this. That was a weekly top. And when did we actually bottom out in 2020? 4,000, right? 3.9. And where did the market find some place of resistance recently? 7,274. Look at the numbers. We are simply trading currently in charts that were done 2016 all the way till today. From 2013 till 2023, this is your MACD. Rising wedge, final topping pattern. You've got the drop. You've got that drop. You had these outliers here, 8.1 to 8.9, 5.6 to 4,001, roughly that 3.9 zone. And then you've been in sideways for about 10 years. Sideways. Now, what is interesting is that apparently, for that lost decade, what happened was everything could also be predicted with the dollar peso. You had actually one of the biggest bull markets in the Philippines due to an appreciating currency, a surplus during 03 to 07. It had a punctuation somewhere in the financial crisis here. But after that quick financial crisis in 08, 09, we still got that appreciating currency. Essentially, a foreigner was always getting paid better by investing in the Philippine markets from 03 till about 2013. There was this opportunity in 08, 09, that fast brief note, but it ended in 2013. Anyone knows what happened in 2013? May 2013, the dollar peso started shooting up from 40 to 60.
Interest rate cuts of ESP.
There was like a taper tantrum. I remember like Ben Bernanke started doing I can't remember the exact date. I think it was something that had to do with, actually nowadays I can't even remember the fundamentals. What happened in 2013?
Yeah, it was credit rating.
Credit rating downgrade? Whatever. 10 years ago, I could have remembered, now I forgot. But technicals would have told you something happened here that made Filipinos go to the dollar. 2013. Everyone from 40 to 42 to 44, everyone was screaming, get the hell out of the Philippines. Go to the USD. And it was such a painful thing that for that 10 years, staying in the dollar, even with zero interest rates, you would have made a 50% appreciation just by hitting the dollar with nothing else. Just exchange all your pesos to the dollar. You don't even earn an interest rate. That was your lost decade in the Philippine stocks. It actually coincided with Philippine peso depreciation against the dollar. There was zero foreign buying, massive foreign selling. It's like every day you're just getting sold every single day. Did that happen before? Yes. 1999 till about 2003, somewhere here. Yes, it coincided with the NASDAQ bubble. Yes, there was a huge problem in the US. There was a huge problem in the US, and for some reason, the Philippine peso was also devaluing. We didn't even have a tech bubble here.
This was after era time.
Era time. So politics.
So transition over.
Yeah. So looking back, there will be a lot of fundamental macro reasons for why these things were happening. But the technicians would just tell you, look, it's obvious. Your money is depreciating wild here, 50%. Who wants to invest when my hurdle rate is 50% for that 10-year problem? So it's very hard to invest in the Philippines when you have that type of depreciation. You're always fighting against currency depreciation. That's the hard part. So I drew this 2016, March. This was a chart I drew. I mentioned that we had peaked at 2013 when the dollar peso was hitting 40 to 44, and the Philippine peso ETHE against the dollar was actually forming lower highs 2013, 2014, 2015. Market was trying to just be stable. But against the dollar, if you were from a US perspective, you were losing money. Because you were either losing 10% of your money by staying in the Philippine peso, even if that PSEI never even dropped. It was gonna cost you just by hitting Philippine markets. And until today, you check that in dollar terms, actually Philippines never broke that trend line. Philippines hit 8.9 in 2018, but it was a rising wedge. No one could confirm that it was a real bullish market. Narrow market breadth, technicians would call you narrow market breadth during that time. And the strategy for the entire decade was very simple. From 2013 till 2023, oversold and overbought, that was your only trade. Always buy oversold at this level around negative 0.03. It happened here. Every bottom, buy. Every rally here, sell. Buy, sell, buy, sell, buy, sell. Lower highs all the time against dollar peso. And just recently, we got back oversold rally. We always have to buy oversold, never buy overbought. That was the strategy. It seems simple in hindsight, but it has been working. So this is your Philippine ETF, EPHE. We are actually, in 2020, hitting a counter trend rally to the mean. So that rise to 7.4 was a mean reversion. 4,000 to about 7.4 was 80% up. 80% up. That was historical, those drops. Sharp drops were historical. Never before seen in 37 years. And you've seen it in your lifetime. You've experienced it in your lifetime. And today, you know that the market is still currently oversold. Today, as of July 14, 2023, Where are we? We are oversold versus a 10-year average, which merits buying. The strategy is buy oversold. This proves you are oversold. You're oversold, you buy oversold, you sell overbought, you make money. We're oversold by at least 26% against the mean. So you are supposed to make money buying the Philippine markets despite everything counter against you. Because that's data. That's 37 years and 10 years of data. Let me tell you how people also navigate the market like 1994 to 2003. This was a hard market. From 3,450, it fell to 977. Down a lot in the index. But how could people invest in the Philippine markets when the dollar peso was depreciating 50%? The index looks like this. Who wants to even invest in the Philippine market? That's 10 years of data. Surely, a person who looks at that data would say, I'd never invest. But there was actually a fund in the Philippines that actually went from 1 to 5 from 1994 to 2003. I wanted to uncover this part. How is it possible that one of the most difficult years to invest in, this fund actually made 5x when the entire index was like down a lot. The entire index was down. What's this? 3,500 to 1,000. We're down like 60%. Index. Somebody's up 500% when the entire index down 60%. How's that for outperformance? So nobody told me this. I just had to investigate everything on my own. Your 1994 to 2003, violet line is PSEI. Jollibee, which is the Chicken Joy fast food company, has been going up about 350% during that time. There were swings. It's wild. If you wanted to see the actual price chart of that move, from 1994, what's interesting to me is how technical Fibonacci extensions, retracements, they can predict the top tomorrow, 5 years from now, 10 years from now. They can even predict the support for the next 5 years. Like, how is it possible that in 1998, whoever was charting this would say, Jollibee one day would hit 31 or 42. It actually peaked at 42 sometime in 2005. 2000, and you could have predicted it 6 years ahead, 10 years ahead, 1996. Just by looking at a few Fibonacci, if it's going to go up, you could predict where the highest high of a stock that's moving will go. And you can also do a few things. This chart may seem vague, but around this time, so your index was slowly going down here to here. This is a steep drop. What happened was Jollibee was consolidating. Just dull. That's something that you have to watch. Markets dropping, this company sleeping. That is a sleeping beauty. That is important to watch. Markets go up. This stock goes from 6 to almost 28. Forex move 400% within 2 years' time. Goes down, consolidates, and in a bear market, it still drops from about 20 to 9, 23 to 9. Something was happening here at 9. 9, which was support there, was resistance here. It kept on bouncing at that resistance of 1996. Whatever was that resistance at 9.6, there was a special number happening at 9.5 and 9.6. Whenever Jollibee reached 10 peso, it will stop falling down and it just get bought and bought and bought. Spot the bullish outperformance. This is the perfect time to load up. Technicals and fundamentals aligned. I'll show you what was happening here. 2000 to 2002. Markets were dropping. Jollibee was sleeping. And of course, of course, we know what happened. 2003 ended up to be the ousting of then President Era. We had GMA replace him. The VAT happened in 03 or 04. Philippines suddenly had a huge surplus. Foreign money was selling the dollars quickly to go hit peso. And once they were converting all their dollars to peso, they were all hitting up one stock. That was Jollibee. That stock went from 9 to 16 when the markets were dropping. And when the market started catching up, that went 16 to 43. That top was predicted 1996. And then after 06, it wouldn't even stop. It just kept running and running. 08, you talk about the financial crisis. Jollibee was just consolidating. Outperformed 08, 09. It never fell below that certain line and kept on moving up. A few things to note. Jollibee shares during the year 2000 had a buyback program at 11. They offered 50% warrants during the year 1998 as well, not to mention all the generous dividends it was giving since the 1996 IPO. So when people say, well, it's a dull market, during that dull market, Jollibee has been printing cash. Jollibee has been giving a lot. And when you try to study what Phil Equity did, so I was just studying this, 1997, company had 17 million in market value, deposit 10. So there was a 70% appreciation in a year in Jollibee. But look at the rest. Bell Corporation, 33 million, went 7 million, lost money. Was this SPI Technologies, 14 million, went 20 million. So you'll see that during a very difficult market, 1997 was a financial crisis, 97, 1998. What this fund did was simple. Look at my holdings, which one outperformed the most and didn't drop? It was Jollibee Foods Corporation. Everything else dropped. ICT fell 50%. You've got Waterfront Philippines, Mondragon, dropping 50%. 80 million pesos went 60 million. 80 million went 57 million, despite the fact that Jollibee was outperforming. So what did this person do in 1998? This person used all that 17 million here, ended up buying all shares of Jollibee, warrants. What is a warrant for those who don't know warrants? Warrants is the ability for you to buy the shares of Jollibee at a certain price and pay only a certain price as well. So it was leveraging this entire position of Jollibee from 1997, which was a winner, to become a monster stock by 1998. And that happened here, 1998. And the newspapers were talking about Jollibee for about 10 years already. Before it even listed, Jollibee's market share was already more than McDonald's. It wasn't like it's not as if it's a startup. During 1998, they set a public offer. Foreign investors were feasting. Everyone could read news. It's not like, oh, it's such a genius move. No, it's all over the world. Historic opening,
You've got fundamentals aligned with your technicals, the entire 1998, 1999, 2000, 2001. Everything was dull. The market was doing nothing. But if you didn't look at the markets and looked at the headlines, you would have said, hey, this company is so successful. There's like congratulations all over. Beyond borders, et cetera. It's like congrats everywhere. 2001 was a bear market, right? But why is this company doing so well? The war heats up. And when you look at all the cash flows, you realize a few things. It was a company that was trading at 10 times multiple, growing 50% in net income, high net operating cash flows, a buyback program, outperforming your technicals. CMT is not opposed to fundamentals. In fact, CMT Association and CFA community love each other and they want to work together. They're not opposite. The more they work together, the more it works. There are certain variables proven over time, predictive capability to select outperforming securities on the whole. The stock price outperforms. The fundamentals are growing very well. Management is great at very cheap valuations. You will make money. So the question is, are there new highs even in a bearish environment? Market today, lost decade. Can they be sustained? Are these leaders the next bull run? URC was found to be a winner in 08, 09, 8 to 20. The first move, this move was already almost double, right? 10 to 20, this was about 4, 4 to 8, 8 to 20. That was a breakout. People are so scared. Can it go even higher? But it did. 50% up. This stock's like up 300%. You're so afraid to buy the 300% move, right? Because it's up 300%. But if you use a relative strength ratio, what you'd simply realize is the market today in the Philippines is at 6.5, 6.6. Did you check Jollibee recently? Use a relative strength ratio to buy the strongest index names within PSEI. Just take a ratio. JFC against PSEI is almost hitting all-time highs. So what's supposed to happen using technicals? Technicals is saying to you, somewhere within the next 5 years, you're going to hit an all-time high in Jollibee. It's going to break 300. I don't know when, but that outperformance is a leading indicator to tell you Jollibee dips are going to be bought. No matter what, even in a sideways market. And what are the stocks today that are trading near highs or all-time highs? It's ICT, it's avoidance power, it's AEV, it's DMC, it's Seminar, it's Video GFC. 1, 2, 3, 4, 5, 6, 7. You've got 30 companies, 7 are not acting the same. 7 names are different. They're moving differently. You don't need to know the fundamentals, but if you want to know the fundamentals, sure, go ahead. Something is happening, and it was predicted by technicals for some reason. Maybe the world thinks there's going to be strong recovery in the world. I don't know. Import, export. I don't know either. But ICD, which used to be, I think, also a strong performer in 1994 to 2003, is behaving the same 2023 onwards. Behaving the same. These are all against PSEI. This is your PSE, that's your DMCI. Either you say it's because of dividends, it's about coal, whatever it is, these stocks are outperforming and it merits a look. Why is ICT doing so well? Why is AEV doing so well? Why is DMCI doing so well? And look at how these stocks are finding support 10 years ago. Those supports can be checked multiple years ago. So Seminar is the same, avoidance power is the same, BDO, the same. BDO's hitting all-time highs in a market that doesn't even want to go up. Jollibee Foods is breaking out in a what? Is that 7-year high? It's breaking out in a 7-year high so far. Yeah, this is 7-year high. There are even stocks that are trading recoveries. They're not index names. You have to ask yourself, why is SSI Plus, EI, Pizza, Nickel, Apex going up? Why is this company going up? This hint. I didn't even know this until I checked the chart. This one went 20x somewhere in 2009 till 2015. Construction firm, EI. Why? Is it because of politics, infrastructure? We can speculate all we want, but that's just what the charts are saying. There's something happening in EI, definitely. There's something happening in Digi Plus. You can say, oh, because Filipinos love to gamble. Okay, that's the narrative, but that's also the chart. Something is really, really strong whenever you notice like it moves 10x. This type of name can go from 1 to 10 peso, it seems. I don't know why, basta lang. Apex is also moving first time outperforming PSI. SSI, I'm not sure. SSI is still actually below. It's below PSI. So it's an underperformer, but it can rally. It can rally, but the resistance here at 2017. So some outperformers will still remember the past resistance of 2017. So it might not be a very, very strong leader, but it still merits a look, right? Nickel is so strong, perhaps because of metals, commodities, I don't know. Shakey's Pizza, it's actually outperforming, but there will be resistances on the way. This is EI, this is SSI, Digi Plus, Nickel Shakey's Pizza, Apex. You look at this. Okay, so these are all the fundamentals. These are what you see on the news. This was what was happening in 2000, 2001, 1999. Everyone was cognizant about the growth, but nobody cared. It was a sideways market, nobody cared. So what? It's just a sideways market. Video hits new highs, still nobody cares. Still nobody cares when micro businesses are picking up. And if you check everything, study year 2000, 2002 era, a stock can go sideways here. And yet, the people who are just accumulating those things, 2001, 2002, they make tremendous money in a bull market. Somebody accumulated from 400 to 700, and it went to 1,500 in just a few years. In fact, if you were buying some PLDT, it was 10x your money in 4 years. Of course, add the dividends. Globe went actually 15x during those times. You can study everything in the annual report, actually. Study how somebody bought Globe and PLDT and ICT and kept on buying for 3 dull years. 3 effing dull years. 3 years. Matagal yan. And they were buying DMC, ICT. There was a lot of purchases there. All that you can say is that if you're outperforming in a bear market, oh my God, that one, 2002, 2003, when the Philippine market broke out, ICT went from 3, oh my God, where's ICT? From 3 to 15. And where's ICT now? 200, right? 200, 3 to 15, 48. Actually, it was ICT that really made them the most money. ICT, the MCI. The MCI went from like 5 cents to a peso. But until today, it's an outperformer. That ends my presentation. My presentation simply tells you that in a sideways market, the people here have shown in their annual reports, you can outperform. a few gems, 5, 6, 7 names, but that's enough to fulfill your portfolio. That's it.